at that time. And we had an empowered committee of state finance minister. For some reason, I was made the chairman. And it was a registered body. So there used to be election every second year. And my colleague finance minister tolerated me for 10 years. But we didn't have any constitutional backing. Not even statutory backing. Just through discussion, because all of us would benefit, we had held about 110 meetings over this period. And all the decisions, these are all recorded, have been on the basis of consensus. You know the meaning of the consensus. If there is a single no, it's no longer a consensus. So it was an agreed upon value-added tax. That got introduced from April 1, 2005. We discussed for about 4 to 5 years. In the value-added tax, the nature of which I have already described, and not repeating it, it had an immediate advantage of boosting up the revenue. Before the value-added tax, if you take the 5 years in the pre-VAT situation, the average annual rate of growth of VAT tax was around 11% or so. After VAT, if you take the 5 years, it got up to 23%. It's a huge increase in the revenue. And there's a relief, I'm told, on the part of the traders, manufacturers, and to some extent on the consumers as well. But that VAT itself had also shortcomings. First of all, in this value-added tax, the central sales tax load has not been removed. It was left at that. That is one. Second shortcoming of the value-added tax. Please be comfortable. You sit anywhere.
Come this side.
There are too many state taxes which were not subsumed in the state goods and services tax. For example, entertainment tax, baking tax, entry tax not in lieu of octroi. These are all left out. These are very important taxes. We want all those to be subsumed into one tax. And finally, alas, the states were not given the power to levy services tax. We needed that. So all these will be combined into the GST discussion. So in the GST, we are therefore seeking for only one tax at the indirect level for center and only one tax for the state, which will combine all taxes given set off for both goods and services. This is what the French economists used to call impôt unique, just one tax, and combine everything into it. Although that is the ideal, but when it was posed, all states' finance ministers said, no, we cannot take that risk. So do it a two-phase thing. Allow the tax, meaning thereby the VAT or sales tax on petroleum products, kept for a few more years. Allow, Government of India said that the excise duty on tobacco, even if it is VATable, let that stay. And I think it was also the alcohol for human consumption would also be outside GST. So those are big taxation elements, and the state finance minister simply says, please, for 2 to 3 years, while we are doing the experiment, do that. But we introduce all these. We have a commitment. But you understand that we cannot take the risk, because if the checks are bounced, then nobody will save a finance minister, not even his colleagues. So we cannot take that risk. So please appreciate, whenever you discuss this at the international forum, when they start talking about it, I think I had asked one United States professional, why are you talking about it? You have not introduced VAT in your own country. Why have you failed? It's the federal structure. In Canada, as you know, I think there is a topic on it. There has been a back and forth movement in introducing the value-added tax. So with this in mind, we now with this in mind, we now move on to the second part of my analysis, rationale being explained. What then would be the structure of the GST? You see, I recall that when GST was first mentioned, there was a mention of a national GST, which means GST would be only levied and collected by Government of India, and then it would be partitioned among the states. All states had objected to it. There are certain countries where it is done. In Australia, incidentally, the central government tend to collect everything, and as if they're doing a favor and then give it to the states. All states, cutting across political differences, no. I mean, there has to be, in a federal structure, a central GST and also a state GST. That's where the concept of dual GST came in. So we are talking about a dual GST structure. The central government will levy a GST, state governments will levy a GST, and although there are two GSTs, but in terms of chargeability, in terms of choice of the taxable event, the taxable person, the procedure of taxation, they would be like Xerox copies. But still, these are two things, and I should mention that. Second point to mention, whenever you go into any practical tax implementation, for very small traders, you spare them the harassment. Benefit cost ratio does not permit it. So there is a threshold limit below which you do not really want to tax them. So it was agreed upon, correct me if I'm wrong, I'm talking from memory, that rupees 10 lakh of gross annual turnover for the goods part in the state GST would be 20 lakh of state GST would be the threshold value below which you do not tax. For services, I think the same figure for the same. For
10 lakhs for the special category.
I'll come to that. Apart from that, there are special categories, teeny tiny states, where if you impose that high a threshold limit, then many of the dealers will go away. You see. So you have to take a balanced view for special category states and northeastern states particularly. There were certain northeastern states who for the first time introduced tax in terms of value-added tax. They didn't have any tax structure. That is our country. For services tax, you just heard that the central GST has again a threshold of 20 lakhs of gross annual turnover. For the goods part, I think a discussion is still going on. We had proposed from the Import Committee of State Finance Minister, there is a book, I think whether there is a copy available, this first discussion paper on GST, where we had said, you see, Government of India for the first time is entering into trading sphere. Traders all over the country said, sir, please do not direct us to two governments. Say it is enough and ask us to go to Government of India. They were not used to it because as I told you, the central excise had stopped at the factory gate point. So we had then suggested rupees 1.5 crore as the threshold for the goods part of the CGST. I understand, going through the newspapers, since I have to debit my office, that the discussion is going on. What will be the real threshold? And some states have said that give the entire responsibility to us, we will collect for you and give to Government of India. There is also a discussion, a certain percentage by states, certain percentage by government. That is at that level, it is a little fluid, it happens. Thereafter, you come to a concept of composition scheme. Very small dealers want to have a very simple scheme that if below a certain point, I think then it was rupees 50 lakh gross annual turnover. If some dealer wants it, without going to the hassle of ITs and so forth, they will just give 0.5% of that and over. Generally, they will be the last point seller. Because if he is not the last point seller, why will he do it? Nobody else will come to him. But that option was kept open. Still it is kept open. Then there is a notion of rates which I will just tangentially touch upon, because these are the things which normally go into the budget announcement. But very broadly speaking, what has been thought of, and I'm just told is agreed upon, that there will be a category of exempted goods and services in CGST where you will not tax. I recall when we were discussing, some finance minister said that Sandesh and the temples, would you like to tax that? Who should not want to tax that? It's not only not hurting the sentiments of the people, but you don't get too much out of it. So can I take a break for a few minutes and come back? Can I wash my hands? If I lose continuity, correct me there. Talking about the rate slabs, this is at the level of discussion. This is something which came out in the newspaper, but I'm just giving an idea of it. First, there will be an exempted category of goods and services to be agreed upon by GST Council, which I'll come a little later, which is basically a forum for Union Finance Minister, Union Revenue Minister of State, and all finance ministers, generally speaking. First is the exempted category of goods and services. Which goods and services has not been decided upon. Then there is a lower rate of 5%, which is state GST plus central GST summed up together. That is a 5% slab, generally for very essential commodities. But you have not fixed the slab for ornaments. And there will be another, which is for gold and silver. But since discussion is going on, I will not make any comment on that. Third, after 5% category, you have a 12% category. CGST, SGST, two rates taken together will be added up to 12%. Thereafter there is 18% category, and thereafter 28% category, and then there will be another slab for highly luxury goods, which may be even higher, on which cess could be likely to be levied. Now, do not be surprised that it is very high. First of all, it is sum total of the two taxes. Before the introduction of the service tax, goods and service tax together, states used to have, again, initially lower rate was even lower, but eventually 5%, and I think 13.5%, the two rates. Government of India's excise rates are very different, but there was also a service tax rate which began on 12 or something, 12%. So if you just add the two rates together, the rates which I mentioned is not very different from that. It is around that, you see. So, so when you would be, Kobita Rao? Oh, hello. How are you? So when you brief the press, Mr. Goel, I'll request you, I'm sure you'll take care of it, please underscore this point. It is the sum total of two rates. Which is being discussed. Now, what is still not decided upon is which goods and which goods. Dr. Kobita Rao is from NIPFP, is a very eminent institute. You are a professor now? Yes. You did your MStat, BStat from Calcutta?
No, I did my PhD
did from Calcutta, yes. We used to come to Dr. Kobita Rao for several technical assistance, like working on the revenue neutral rates and so forth. And Kobita was totally uncompromising. I would like that. If it is high, it is high rate. Now, incidentally, coming back to that, these are the rates which have as of now been agreed upon, minus the rate, special rate on ornaments, which I would like to assure the other students would be very low normally. Because we made a mistake once. Somebody said in a very puerile manner, if the rate on milk can be, in those days, can be 4%, why on ornaments it would be 1%? It should be more than that. I think one finance minister, I'm sorry for the digression, he was insisting. I said, all right, you go in your own way. In the value-added tax regime in the Empower Committee, we did not impose anything anyone. But halfway through the fiscal year, he came back and he said, Dr. Azub, something has happened. All the gold trades are taking place just outside the border of my state. And I'm losing all the rate. Because even if it is 1%, on gold 1% is very high. And in Indian customs, in marriage and other ceremonies, gold is exchanged, and sometimes used gold ornaments is also reused. And if you have a high rate, and if no other states have it, all trade should be diverted in the other states. Not necessarily physically, but that is what they will do, you lose all revenue. So that's why, if somebody asks you, why are you keeping the ornaments so low, please explain that ornaments are also used by absolutely common Indian legislation. After this rate structure, I have now entered into one little complex area. This is what we call integrated goods and services tax. You see, how would you do the taxation if a commodity or service, it originates in one state and it is sold in the other state? I'll give an example. Suppose somebody manufactures a commodity in a place called Shiliguri in North Bengal. He will get the input tax credit out of the output tax. State government will allow that, because after all, he is getting the output tax and he is also getting the input tax. First of all, he will get it and then it will be refunded. But if the commodity is produced in a distant state like Maharashtra, so if the exporter is in Maharashtra, importer is in West Bengal, how will the West Bengal government get the revenue from Maharashtra? So if he gives the set-off, it is only a set-off. It doesn't have any entry into the system. Something has to be done. And after a long discussion, we introduced, this is a novel thing, in other, in European communities it is not done, this is a reverse charge practice, we removed that. What it means is that some or other, the input tax which that particular dealer must have paid to the Maharashtra government, which is an exporting state, that has to be transferred to the West Bengal, the importing state. That has to be done. So that has to be done by an agency which should not be either Maharashtra government or West Bengal government. So that agency role has to be played by Government of India. That's where the integrated goods and service tax concept comes in. IGST is called. Now, what it means is that there will be a tax which is IGST, which is CGST plus SGST. Now, Maharashtra government dealer, while paying this IGST, the exporting dealers, gives the money to Government of India. And he gets the set-off, and Government of India gets the money, and from that fund, he transfers it to West Bengal government. And therefore, in West Bengal, the importer dealer, he will, while submitting his output tax liability, he will deduct that part because the Government of India has already gotten it. So that is called integrated goods and service tax. I can make it a little more complicated, but I think I will spare you of that. So this is the idea. Kindly keep this in mind. Other thing about the structure, I should mention imports are now GST can be done. And so for incentives are concerned, the decision which I had taken, no more incentive at the cost of taxation. If you want to give an incentive, give it straight away from the budget. Do not disturb the tax structure. that was the decision then. I hope it is not. Please stick to that. Now, after having said all this is about the structure. This is the structure necessarily would now lead us on to a constitutional amendment. Why? Because the structure has given this power, theoretically the power of levying service tax to the states. But states don't have this power. And so they have to be empowered. That can only be given in terms of the constitutional amendment. There were two amendments. I'm talking on the last one, which is 2016 amendment, which got the presidential assent, I think, on 8th of September.
Yeah.
So that amendment I requested Dr. Kumar. It has
We have circulated.
So I'm talking from a memory, but you have it before you. Not all clauses are that important, because many clauses are just consequential clauses. Consented on clause 2, which you find in the first page. What does it say? It basically says that clause that the parliament and the state legislatures are hereby, through the clause 246A, are being empowered to levy the services tax, and goods and services tax, and except that when it is IGST, this empowerment would be only with respect to Parliament. Now, since I am talking at NUGS, I will just tease you with a question. You see, here you will find that the clause here is 246A, and it is written that by overriding two other clauses, namely 246A and 254, this 246A is being entered. This is the most interesting and important part. You tell me why. The two previous articles, 246 and 254, are being overridden. Why? Why it was important to write this? Students are good.
So because Article 246 gives the power to the central government and the state government to make laws with respect to the